Nvidia is no longer just a tech stock, it's a geopolitical chess piece. Its chips power everything from ChatGPT and autonomous vehicles to military simulations and cutting-edge robotics. And this past week, Nvidia's stock reminded us just how fast sentiment can shift when a company stands at the intersection of innovation and international tension. Here's what happened. On April 9th, Nvidia surged nearly 19%. A big move, even by its standards. The catalyst? Former President Donald Trump announced a 90-day pause on certain reciprocal tariffs, and Wall Street instantly breathed a sigh of relief. It was seen as a reprieve, a temporary de-escalation in the trade war that's been quietly building again between the US and China. Semiconductor stocks, especially Nvidia, loved it. For a brief moment, it felt like risk was off the table. But the next day? Nvidia dropped nearly 6%, a sharp reversal, driven by the realization that the tariff pause may just be temporary noise in a long-term storm. The fear returned. Analysts and investors began grappling with a tougher question: how exposed is Nvidia to the very fault lines shaping global tech? That's what we're diving into today. Let's start with the reality: Nvidia is in a category of its own. It owns over 80% of the market for high-end AI training chips. Its H100 and A100 GPUs are the gold standard for data centers, cloud services, and any company serious about artificial intelligence. And that dominance is translating into revenue and market cap gains that would make even Apple and Microsoft blush. But here's the thing: greatness invites scrutiny. The US government has already put export restrictions on certain Nvidia chips to China. The fear is simple: the same hardware that trains language models can also fuel military AI, surveillance, cybersecurity, autonomous weapons. So, regulators are watching. Meanwhile, China wants to accelerate domestic chip production, with Huawei and SMIC ramping up R&D. Nvidia's long-term dominance in that region is not guaranteed. Now throw in the recent tariff headlines. Trump's Liberation Day economic plan includes a potential 25% blanket tariff on imported goods, with specific increases aimed at hostile actors like China. The idea is to reshore supply chains, bring manufacturing home, and punish companies relying too heavily on foreign components. So where does that leave Nvidia? On paper, they are better positioned than many might assume. A large portion of their AI server production is based in Mexico, which could help shield them from some tariffs. That's part of why Bernstein analyst Stacy Rasgon reiterated an outperform rating on Nvidia this week. He believes that while tariffs are a headline risk, Nvidia's fundamentals and strategic manufacturing locations give them some insulation. But let's not get too comfortable. Because tariffs are only one front in this war. There's also demand concentration to worry about. Nvidia's top customers include hyperscalers like Amazon, Google, Microsoft, and Meta. If even one of those players decides to pivot more aggressively to in-house silicon, like Google has done with TPU chips, Nvidia could face margin pressure. And then there's pricing power. Right now, Nvidia can charge a premium because of demand. But how long does that last when competition heats up from AMD, Intel, and even open-source AI hardware consortiums? Despite all that, investor confidence is still strong. Cathie Wood's ARK Innovation ETF just added over 343,000 shares of NVDA in early April. She sees Nvidia as central to the AI revolution, and she's not alone. Cantor Fitzgerald continues to call it a top AI pick, citing consistent upward trends in AI demand from enterprise, defense, and scientific sectors. Let's not forget, Nvidia's not just making chips. It's building the entire AI development ecosystem. From software toolkits like CUDA, to cloud services like DGX Cloud, and even partnerships with Microsoft for Azure AI supercomputers, Nvidia is playing chess while others are playing checkers. That's why some analysts say that even if tariffs bite a little, even if growth slows modestly, Nvidia is still positioned to be the picks and shovels supplier of the next industrial revolution. But here's the macro concern. When a company becomes this powerful, this fast, and sits in the epicenter of a global tech cold war, it's not just earnings and innovation that matter anymore. It's diplomacy. It's regulation. It's where governments draw the line between innovation and national security. And in that regard, Nvidia is entering uncharted territory. Can it maintain its dominance while staying politically neutral? Can it scale faster than the regulatory walls that may be closing in? And what happens if the AI market consolidates or plateaus? These are questions Nvidia hasn't had to answer, until now. So, can Nvidia survive the crossfire? Yes. And more than that, it can still thrive. But the path forward will be bumpier than it looks on the chart. There will be regulatory speed bumps, geopolitical surprises, and competitive curveballs. What's changed is this: Nvidia isn't just a growth stock anymore. It's a strategic asset. And assets like that? They don't just face market risks. They face policy risks, political backlash, and public expectation. So whether you're long Nvidia, trading the volatility, or just watching the AI arms race unfold, one thing's clear. The fight over silicon has only just begun. Let me know in the comments, do you think Nvidia can stay ahead of the political storm? Or is it headed for some rough rebalancing? And if you enjoyed this breakdown, hit that like button and subscribe for more deep dives into the tech stocks shaping our future. Catch you in the next one.